Good morning, Paul Georgi from Allendale. It's May 25th, 2010. Well, we're going to be lower today across the board in commodity markets. The biggest focus is on the euro, the Spanish debt that where Spain has taken over some banks. We've also got South Korea, North Korea situation is intensifying. The U.S. now and South Korea are going to do some military exercises in the area. That's causing some concern and some current concern about the world situation. The default of the euro is another huge concern here this morning, and then you combine that with technical action and trader confidence is causing liquidation in commodity markets across the board. The dollar, for instance, is up over 100 points as we speak. Crude oil down $3. Gold just marginally changed at this point in time, but the grain markets, when they closed at 7.15, we've seen corn anywhere from 5 to 7 lower, soybeans 10 to 12 lower, and wheat anywhere from 4 to 5 lower. Some of the other factors that are causing market influences in the grain markets today, China says that they will dig into long-term reserves if they need to in order to control the supply and the hoarding of corn, which they claim is causing the price to go higher in China. So that's a big concern there, which would lead us to believe that, well, they're not going to be buying any more corn here from the U.S., but that's compounding or throwing fuel on the bearish fire here this morning. The other facts that came out yesterday afternoon, the USDA says we got 93% of the corn planted versus 89% average, 71% emerged versus 62% on average, and that the crop is 71% good to excellent. That's up 4% from last week. Very positive news there. We've got, as far as the crop goes, bearish to price here this morning. Technically, we got support at 360 in the July contract, and then major support around 351.5, resistance 375, and then major resistance at 385 in that July contract of corn. In the soybeans, news out of China there that the feed meal is not being consumed as rapidly as possible. Their pork industry is running into some disease problems, which is normal, but getting a lot of PR here this morning, and they're saying that the pork producers are not rebuilding herds there because of the blue ear disease that is causing some problems with the pork industry. That in turn is causing reduction in meal needs and putting some pressure on soybean markets there. Plantings on soybeans were 53% planted versus 57% average. The technical action there today, we had support at 931.5. We took that out overnight, and we at 7:15 we closed around that 930 area. So our next level support right now is around the 920 area. So that's going to be watched closely here today. In the wheat, crop conditions there, 66% good to excellent, maintained the same as last week and compared to 45% a year ago. So we've got a very good wheat crop underway. The supply of old crop wheat is still in the bin in many cases because of the poor quality. The hopes there is that the producers will get some good quality new crop wheat where they can blend it off and salvage some of that lower valued wheat that they've got in the bin. So that in turn, that's putting some pressure on price. Overnight we tested the contract low of 460.5 in the July contract. That's going to be initial support here today. If we break through that, I'm sure there'll be some more stops hit and push this market lower. So we're testing a lot of the major support areas here this morning. Over in the cattle, another debacle there as far as price goes. The market's overnight down over 100 points in the nearby cattle contract. mainly because of stock market and outside market influences and just trader attitude. The choice beef was down only 20 yesterday, select unchanged. Cash cattle haven't traded yet this week, but you know, it's going to be weaker than last week unless the stock market would make a major turnaround. But we're hearing some bids at packer levels at $93. That's anywhere from $2 to $4 cheaper than last week. Technically, we had support at $90.50 in the June contract. Well, that's taken out already in the overnight trade and electronic trade. So we've got to just let this thing go. And it looks like anytime we get rallies in this thing on a daily basis, take advantage of it and make some sales. In the pork complex, cutout values there were unchanged. Demand for pork and fill-in buying has helped support product, although cash hog markets are weaker here this morning again. Packers don't seem to need any more supply ahead of the Memorial Day holiday. That's kind of keeping a lid on the on cash prices, and then throw in the influences from outside markets. We've got support in the June contract, the hogs at $80. We may go down and test that here today. That was last week's low and a key chart area there. Again, if that market is and that point's broken, I'm sure there'll be some follow-through stops there that could push this thing sharply lower with the overall attitude of markets here today. Wish I had better news for you, but these are some very treacherous times. We wish everybody a very successful trading day. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We will talk to you tomorrow morning. Thank you.